you had seen this data last Friday, you might have been more inclined to be bearish on gold like we were because of this data. 3.56% move out of gold, or short or sell or closing positions, whatever it is. We can actually break it down if you want to. We can take a look at long contracts. Sure, they have more long contracts than short contracts, but that seems to be changing, and we're tracking it every week on the COT data.
So a couple of trades I was looking at today. I'll go through these, and then I can look at a US dollar pair as well. But Aussie dollar, New Zealand dollar, you know, the slowest moving currency pair there is. But it just gives us a nice setup today. So this is the day chart, guys. You can see, you know, price was clearly in a downtrend. Yeah, we're, you know, still firmly in this downtrend. And we had a bit more room to move into before we hit the next level of support. And that is basically what my targets are. The next level of support in a downtrend, next level of resistance in an uptrend, you know, not rocket science. And we had a break of this support level. Okay, we thought it might be holding and pushing on up, but it's broken down ever since. We had the Aussie dollar interest rate earlier, and that was as expected. But we've had quite a, you know, a bearish Australian dollar, and we're just trying to capitalize on that, really. So if we drop down to the H4, you know, there was this nice level here, which was once support here. Yeah, when it breaks and comes back and tests this level, it becomes good resistance. And we actually traded this on the hourly candle, and we just took this candle here. Yeah, so we've been selling it ever since there, and we're, you know, so far so good, and we're looking to take it back down to that support level that we showed earlier. So Aussie dollar, New Zealand dollar, we're liking the look of this trade down to those lows. And also, I know I trade some, you know, pairs not everyone necessarily trades, but I trade, you know, all of them, right, basically. But pound Swiss franc, this is just, it was more just the interesting day level that it was at. And with pound Swiss franc, you know, we was in this descending triangle, you know, and basically it's going to break one way or the other. It's going to break to the upside, or it's going to break to the downside, because price just cannot keep contracting in here. And it broke to the upside to the point where we got higher highs. So we were in an uptrend, and, you know, price just come back down to the lows of this level here and the base of this descending triangle, and just really like this level, and we're getting a nice bullish reaction so far. So those were the two things that I was looking at today. So yeah, and Swiss franc yen short.
Did you know our market scanning software, the EDGEFINDER, just got even better? Check out our newest asset, Bitcoin. That's right, Bitcoin was our most requested feature update, and we're so excited to announce Bitcoin is finally here with plans to add even more crypto in the future. We've also updated our most popular feature, the Smart Money Tracker, adding even more data than before. The EDGEFINDER not only automatically scores 8 different metrics for each asset to give it an overall buy, sell, or neutral score, but it also keeps track of bank and analyst positioning, stores historical fundamental data, shows how assets are trending throughout the day, and so much more. Right now, our YouTube viewers can get the EDGEFINDER at a discounted price when they use promo code A1YT. You can check out the EDGEFINDER with the link down in the description below, and again, get it for the special discounted price when you use promo code A1YT at checkout.
Very cool. Very cool. Yeah, no, I think there's something to be said there, Tom, about when it comes to currency pairs or charts that you trade. At the end of the day, it really doesn't matter what you trade, as long as it's something that you're comfortable trading, that you've, you know, done your homework on, you've done the research on. You know, like my oil trade here that I've got right now. Not a lot of people trade oil. It's not like an incredibly popular. Well, actually, I take that back. A lot of people do trade oil. There's a lot of it's a very heavily traded futures contract. A lot of people do trade oil, but the point is, various markets may or may not have a popular kind of group. I know somebody who trades a ton of silver, and silver is definitely not nearly as popular as gold, but they've really found their sweet spot with like trading silver. And if an off cross like pound Swiss is where you're finding your best opportunities, then who's to say not to trade it? It's one of those things. You really just have to trade what is comfortable to you and what you're finding to be, I guess, the most profitable. Tom, in terms of this gold and silver sell-off, now that we're on the topic, what do you make of it? Do you think gold, I pointed out a level here, the weekly chart, and you're the weekly chart king. So maybe we should take a look at, take the weekly from your perspective, but gold has come down a long ways. Do you think it's likely to bounce off of this level, or do you think gold has more momentum to the downside? What do you think?
This is the weekly chart, and this is that same level that you had, Nick, that I saw earlier. Yeah, and any weekly level, generally speaking, even if you don't think of that as a support level, try to think of it as a buying level. There are buyers sitting in there. That's a fact. So there will be buyers sitting in there waiting to take price higher. Yeah, we don't know if that will be an absolute change for gold, or how far that will go up, or how big the bounce will be. But there will be buyers at that level. Yeah, that's a given. We just don't know how strong it will be. And then, if that level holds, we're still in a weekly downtrend. There's if we just think of it structurally, we're still in a very bearish. I mean, look at that weekly candle. Everything is bearish, and like you said, Nick, I'd never buy that level in a million years. I would never buy it. I'd be looking for something to retrace into an area of value to take lower. But there will be a reaction there.
Sure.
And then
that's a good way of pointing that out, Tom. I mean, it's a major level. So even if sellers do take over that area, I think you're totally correct in the thinking that the buyers may give it a try. I made the point too, Tom. I think that it also depends who you're talking to, who you're asking about gold, because to your point, when you say there are buyers hanging out in that area, gold sitting here in the 1815s, you may get different answers from different people. If you ask somebody who's managing $1 billion on behalf of a bunch of clients, and they're saying, hey, things look a little bit seems to be some real negative factors in this market, in this world right now. They're trying to invest on behalf of clients, right? And that's the people who move the markets, is people who can make these major buying or selling decisions. If they look at the current environment and they say, well, stocks look kind of scary, and the dollar looks strong, but maybe interest rates are going to kind of peak out and start to turn. If that's what a big time investor is looking at, they might say, hey, you know what, 1815, I'm going to start dipping my hand in the cookie jar and start picking up some gold. But for us as traders, for shorter term traders especially, do not be fooled into thinking that just because that individual might be thinking that way and might pick up a large stake in gold, it does not necessarily mean that, oh, there's the bottom, it's going to drive higher from here, because that person has a different perspective. They might be buying and willing to buy more for the next 6 months if it trades down to 1680, right? So the point is, you have to think from different perspectives. Is this level a buy? Well, think about it this way. If you're a day trader, if you're a short-term trader, like we're talking about here, Tom, yourself, even you reference the weekly chart, but it's still in a weekly downward trend. If you're an investor, maybe you're looking at it on the monthly or the weekly chart and you're saying, hey, you know what? Probably getting some good value here longer term. Let's say I have a 3-year outlook. That's different. From a day trader and a swing trader's perspective, this level should be with caution, because again, as you mentioned, I've got the same idea marked up on my chart. Gold fundamentals look bearish, and technicals as well in that weekly downtrend. So a pullback and selling opportunity, in my personal opinion, is the path of least resistance. But again, that doesn't mean that if you're like an investor or somebody who's longer term swing trading, like 3 to 6 months, maybe even, if you're that kind of trader, maybe you're saying, hey, I think I can get some value here, even if it is counter trend in the short term. So different types of traders. Would you agree, Tom?
Yeah, totally. I mean, it's the way I approach stocks. So I'm just looking for, FTSE 100 stocks that pay a good dividend. To be honest with you, I don't care where they are on the chart. I'm going to hold them for years, collect my dividend, and exactly to your point. So it depends how you trade, what you're trading, what your timeline is, and some people just may purely base it on fundamentals. Some people might purely base it on technicals. There's so many ways to cook an egg, basically. Yeah.
Exactly. That's a great way of putting it, Tom. Yeah, no, I definitely agree. We're just going to pull up the charts here. We're going to pull up a couple things at once. Got the dollar index bottom left. We got oil bottom. Let me start over. Gold top left. This will keep track of gold. Dollar index in the bottom right. And then in the top right, we'll pull up the US stock index, the S&P 500, to get a reading there. We will watch the reaction here together, guys, but don't go anywhere after the spike if there is one. Regardless, we'll break it down and talk trading setups following the number. So breaking news coming in right now. All right, guys, and we are about 5 seconds away here from getting the number. Let's see if we can get some kind of reaction out of job openings. DXY showing a bit of strength here, perhaps suggesting more jobs opening than expected. And what the Fed wants is they really would like to see this number be lesser than expected. Unfortunately, it was higher, and we knew it was higher before we looked at the number. If you are, we'll come back to that. Let's break down the number. We'll talk a little bit more fundamentals in a moment. 9.61 million job openings compared to 8.81. That is a substantial difference. And the dollar likes it. The dollar likes it because that shows this U.S. economy is not cracking, at least on this front, the job openings figure. This is ahead of NFP, which comes Friday. That is a really important figure. Dollar index jumps. US oil pulling back slightly. Gold taking a little bit of a beating, back down to 1822. Not what you want to see here if you're a gold bull. Again, we're back down to the 1822. Are we going to crack through that low? That's going to be the question of the day, I think. S&P 500, 4271. I wish this, maybe someday you guys will be watching the stream. It'll be like CNBC quality where I say like question of the day, and then the producers can just throw up like on the screen, like click a question of the day. Because the question of the day, if it was possible for us to do, the question of the day would be, is gold going to break through the previous lows? That is the question. So anyways, maybe these producers can whip up something like a poll on YouTube or something. That would be a good current event question. Anyways, gold back down to 1822. You got the S&P pulling back, dollar strong. And again, this makes sense, right? Job openings. Now, notice something, guys. I'm not patting myself on the back here by any means, but I think it is important for you guys as viewers to understand this. We knew that the number was hot before we looked at the number. So many traders like to dismiss fundamentals, thinking, oh, fundamentals, the news just does the opposite every time, or it does something random. It's not predictable at all. Guys, the figures make so much sense. If you ever watch me do these spikes, I'm by no means the most knowledgeable fundamentalist trader. In fact, I'm what you would probably get the upper end of like retail YouTube in terms of levels. If you start watching like CNBC or Bloomberg, some of these analysts and traders on there, hedge fund managers, they are on another level. And guess what they all do? Just a little bit of a warning. They don't talk about chart patterns. They talk fundamentals over and over, economics, macro drivers, big stuff, moving the markets. They don't talk about head and shoulders pattern. Will they talk about it here and there? Yes, it's a component to what they talk about. They talk about moving averages at the highest level, guys. You got to think at the highest level when you're listening to major money managers on these major shows, they're looking to attract, investors. They're talking mostly macro fundamentals with some technicals dashed in there. momentum being a factor. They look at moving averages. The point is, if the highest level people are talking fundamentals, that's why we do it here too. I'm trying to help on that front. If you're new to the show, let me just invite you to hit that thumbs up button and subscribe, and maybe you can pick up some more things over time. Anyways, this dollar move, like I said, it makes sense. This shows that the job numbers here this morning, the job openings were hot. They showed strength in the jobs market, and that strength in the jobs market is being reflected in a pop on the dollar, right? A strong dollar is oftentimes preceded by strong employment, right? We have very, very strong here U.S. employment. It's one of our leading indicators or leading contributors to inflation. Strong labor market continues to put pressure on inflation because everybody's got jobs, everybody's spending, people are getting, wage increases, but not at the same pace as inflation. That's a whole nother story. But point is, dollar looks really hot. S&P 500 plummeting back down to lows, and here goes gold down to 1821.8 as we speak. Yeah. I've just joined the stream, recently been trading oil and trying to figure out how fundamentals impact oil. O'Brien, you're in luck. We just put out a video on that very topic. I went through the fundamentals of oil that I pay attention to in my own personal trading. And big thing, there's several drivers. Economic demand globally, Saudi Arabia and Russia, inflation statistics, GDPs globally are a big one. There's a lot of things to think about with every market. There's a reason this stuff is not easy, guys. It's a lie that is commonly sold, that this stuff is going to be easy and that as simple as support and resistance is going to make you a millionaire. There's a reason why most people fail this stuff. It is harder than it looks. It is not just, in my opinion, pretty charts and patterns that are going to. Like I said, I always make this clear. I like technical analysis. I use it in my trading every day. But fundamentals are a key component to what we talk about on these shows for a reason. We're modeling ourselves after the hedge fund managers that we listen to on the highest, level. They all talk macroeconomics and fundamentals. So think about it that way. Anyways, that shirt looks nice on you, man. Thank you. I appreciate it. I've had this shirt for quite some time. It's a very fall festive shirt. I think it's pumpkin season. So I figured I'd start wearing my plaid shirts a little bit. All right, guys, let's talk dollar here for a moment. Again, dollar shot up on this news, and that puts us at, yet again, fresh highs with this dollar push. If you're looking at dollar and you thought it was expensive, over a year, there it goes, right? It continues to push higher. This has been, as mentioned over and over on this show, we have pointed out that retail traders have been consistently shorting the dollar for some time now. And here they go again, still short. And I'm not saying this based off of speculation or gut instinct. I'm telling you from the stats that we have from various brokers that we collect data from. Our software tool, the A1 Edge Finder, allows traders to get tons of data to help them in their trading. And one of the key statistics is the retail sentiment tab. This allows us to look at what retail traders on average are doing. In just a moment, I'll tell you how you can look at smart money in this tab here. Let's do this first, though. The Australian dollar. Retail traders are long on the Aussie and short on the dollar. New Zealand dollar, people are on average, retail traders, long Kiwi, short dollar. Pound USD, they're long the cable or the pound against the USD, of course. So that means they're short bias on the dollar. Dollar Swiss, they're long on the dollar. And this is kind of the offset one. You've got Euro USD, high level of long in the Euro. A lot of people short on the USD. And then if you take a look at dollar CAD, this one, they're short US dollar and they're long CAD, and dollar yen, they're short USD, long JPY. My point with showing you guys this is, remember, retail traders typically are on the wrong side of a strong trend in the market, and we can spot that exactly in our data. This is why data and economic figures are so valuable to traders. Next up is the Smart Money Tracker. Let's take a look at what institutional money is doing week to week. You might say, Nick, how the heck are you doing that? Well, we access the COT data with our software, which automatically pulls in this data and displays it in an easy to use format. When I say we, if you're newer to the show, welcome, first of all. Second of all, my company A1 Trading, which is putting on these shows and coordinating all of our guests and co-hosts and things like that. We also build software tools. That is our primary way that we make money. We sell software to traders who are looking for tools. Now, this is something separate from my own trading. I do trade every single day on these shows as well. But, my company, A1 Trading, we build software tools for traders. We specialize in collecting, sourcing, displaying, and interpreting data for traders around the world. And we have thousands of people using this software every day. So let me go through this Smart Money Tracker and maybe you can see what all the hype is about. Smart Money Tracker shows us what institutional money is doing, what they're buying, what they're selling, etc., on a week-to-week basis according to the CFTC's Commitment of Traders data. And taking a look at oil, you can see oil is super bullish. US dollar super bullish, gold bullish. This is a question mark. What the heck's going on there? I thought they were the smart money. Can smart money? I thought they were always right. They're not always right. They can be wrong. Anyways, euro, take a look at this. The euro, they're still very bullish. JP225 bullish. And let's take a look at the bears. Where are they bearish? They're bearish on the Australian dollar. Makes sense. Chinese slowdown impacts Australia negatively. You've got Japan. Japan also same kind of factor, that Pacific region kind of under pressure with Chinese slowdown. But they're also short on the yen because, the Bank of Japan, compared to some other central banks, is quite dovish, right? It's not raising its interest rates nearly as much as counterparts in the US, Europe, etc. Anyways, the Canadian dollar also, and by the way, yen weakness has been part of the driving force to gold weakness as well. Something to think about. Quick interpretation on that. Yen weakness, how does that cause gold weakness? I'll tell you real quick. Yen weakness, the dollar index is an index against several other currencies. The euro, the Australian dollar, well, actually not the Australian dollar, the CAD, and the yen and the pound. So if the yen weakens tremendously, the dollar strengthens tremendously. Strengthening dollar, weaker gold. Okay, there's a little fundamental tip of the day and some factors to consider. So this is the institutional positioning, but let's now turn our attention to where they've been buying and selling and where have they been changing in the most recent filing. This is where things get interesting. UJ just cracked 150, says Mulhansman in the chat. Yeah, that's kind of interesting. We've got to keep an eye on that dollar yen cross. Anyways, S&P saw an increase on the weekly basis, which is kind of interesting. NZD also saw increase, CAD, and surprisingly silver. But pay close attention to silver, but keep an eye closer on gold, in my view. Look at gold down here, guys. Gold has got a pretty substantial sell-off. And this preceded, if you had seen this data last Friday, you might have been more inclined to be bearish on gold like we were because of this data. 3.56% move out of gold, or short or sell or closing positions, whatever it is. We can actually break it down if you want to. We can take a look at long contracts. Sure, they have more long contracts than short contracts, but that seems to be changing, and we're tracking it every week on the COT data.
Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free EDGEFINDER, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.